Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, May 23rd, 2023. Again, an interesting day as we walk through this debt ceiling conversation, fight, battle, whatever we want to label it, within our markets, and the inability for the two parties to come together with an agreement, and how one side continues to say major impasse, that not able to get through this impasse, not able to do this, and where another member of the same party will come out and say, well, yeah, we still have a lot to really go over, but we are making some progress. And so we're reaching these levels where it's like, okay, what is it that you want us to believe? Because each day that you go without an agreement just makes it more clear that the country will have no choice. The Treasury Department will have no choice, but then to really start to implement emergency, and I put quotes around that, measures in order for the government to continue to function and hopefully start to pay its bills. So some things are going to start to happen, and that will happen on June 1st. Or as Janet Yellen has basically come out and said, that she will do her best to see what can be jiggled around, what can be changed, what can be moved to continue to keep the government functioning and to keep the bills to get paid. It is a very interesting time, to be honest with you, because I believe there's a lot of people out there that are just really on this path of like, don't believe them. It will never happen. We won't default. And it's like, you don't understand how the law is set up right now. The way that the United States Congress has set things up is that we need their permission. You want to spend money, you need our permission. You want to raise that debt limit, you need our permission. And if you want to do it again, you still need our permission. And so suddenly we're counting on our lawmakers, who are politicians, not economists, to make decisions that are going to affect millions of people. And now the decision that they're choosing to play hardball and not come to an agreement within the time frame that is necessary. And now they're making it very clear that as we approach May the 24th, that in 7 days, of which we have a holiday and a weekend, right? So basically, within 4 days, two houses of the legislation need to put that legislation into a legislative language, vote on it, send it to the other, in this case, from the House to the Senate, where the Senate's got to take a week, et cetera, et cetera. And we're like staring it down, straight down the barrel. Not going to happen. The market decided to suddenly today to really start to take that a little bit to heart, to realize that it may be totally unintentional, or they're not really looking to do that. But it's like, you know what? It is going to happen. That is what's going to happen. Because you're not allowing it. That is what will happen. The government will have no choice but to default. The government will have no choice but to start cutting who gets paid and who doesn't get paid. And then it's really going to start to affect Americans. And the market is now waking up going like, we're not supposed to like that, and I don't think we will. So what did happen today? When that's suddenly bashing after bashing of, we're still at an impasse, not coming to an agreement, flashing red lights of warning, the market basically said, oh, okay, well, we're going to start to hit the skids here. We're going to start to exit positions. We're going to start to knock down what we just sent up to the moon. Now, the Russell managed, to stay higher all day until the end. Now, I just want to say, before we really get into the S&P and the others, let me just take a look. Let's just take a look. And I'm going to go up to the daily chart on this. because it is extremely interesting. I want you just to take a peek at what that candle is for today. A shooting star right off the high of an ABC. What's the Russell telling us? Time to go back down and probably go below 16,093. So where did it get today? 1,815. Oh, we need to drop 115 Russell points. Big move for the Russell. And they kicked it into gear after staying higher against the other indices dropping. Back over in the S&P, we failed yet again. And we failed at 42.20, this high, which was on the 19th of May, so last Thursday. We had 42.27. Then we got stuck at 42.22. Then we got stuck again today at 42.22. So 2 days we got stuck at the same level, and then today they started to bring it in. They started to take it down. So again, we still remain in this B wave, but now, if you remember, I'm going to drop it down. So we still, oops, I didn't mean to do that. Let's get over here back to my chart. We remain inside of the C wave. We remain trying to put the completing moves on an intermediate wave C and a primary B wave. That remains the picture, but now we're stuck. Now, we did well to get in what I was counting as the minute 3 of minor 5. We got above this 3. That was 42.06. We got up to 42.27. We got closer to this 50 number. So it can fail from here. And now I want to bring it back down to the hourly. Remember what I said yesterday? I said, well, I don't really want to see it below 41.73. And I gave truly the benefit of the doubt by taking this down to the line chart, right? So it was on a closing basis and not a candle that had an extreme to it. And that brought us just to 41.69. That was the body of the bar. And it's went right through it. In fact, it closed below it. So if I'm coming back up to where this high, again, 42.27, really much likes to me, they got a 1, a 2, and we're coming off in a 3. Or is it an A, a B, and we're coming off in a C? But see, wave 4 would have broken below wave 1. It invaded the territory. Nah, can't happen. That is a big rule, right? So that's off. So what possibly could this all really be? It's got to be a failure right from that level. And so this 3 has to go here, this 4 has to go here, and this 5, as ugly as it is, can be exactly what happened. And instead of going up and having the ability to continue, it failed. It failed inside the 5th wave. Now, that would put this as a 1, a 2, and we're into the 3rd wave. And it certainly traded like that today. Wave of seller after wave of seller after wave of seller. And that actually happened at the noon hour in New York. So prior to that, it was a pretty, like it could have been, that 4 could have moved over to here. It wasn't really breaking anything. It got as low as 85. Okay, that's not a problem. Even going down and filling the 75s, that still shouldn't be a problem. And then suddenly it broke. And then it broke. And they couldn't rally it back up even after the hour, after the close. So I'm not going to mark it because I'm telling you, the second I do that, something will come out later and this market will turn and flip and move higher. But it's going to be very important as we open here in Globex as to what the market will do. Now, the danger is it's going to open, and if it's got something to really fall, well, then it's not going to be nice. Because if we continue to drop and we drop below 41, well, then this is over, folks. You can't drop below the lows of wave 2, and still try to call it a 4 or call it something. If this is a minor degree, so there's only so much you can fiddle with in between on ABC. Was this 1? ABC, is that 2? And we got this gigantic minor wave just to hang on to a bullish posture against negative economic things. It just doesn't make sense. Or that we're going to hang on to, oh, come on, the Fed's going to be fine. The Fed's going to take care of us. Don't you worry. Look at what they're doing in Apple and AMAT and Amazon and Google and Intel and Meta and Microsoft and NVIDIA, et cetera, et cetera. All those stocks are going up. They know something. What don't you know? I would ask the same question in reverse. The bond market did tick up today. I consider it a bounce. It could turn into a bigger bounce. And the bond market had gone down to a support level that would have finished an internal third wave. So it's just a fourth wave bounce. And then we continue to go down. Because really what should be happening here is that we're going to get a spike in rates, not a decrease, a spike. And this fallacy of like, wow, the Fed will come out and rescue us. They're not going to raise the rates. Look at, we're all dying over here. It's like, no, that's not what's going to happen. We have the Fed minutes tomorrow, folks. We'll then get a cleaner understanding of what were they saying behind those closed doors. What really is the indication? We've had several governors come out and say, at least 2 more hikes this year, at least 2 more. Expect one in June and likely in September. Oh, okay. So how are they going to save us, folks? When we start to drop, when all of this gets put together, is it going to be deflationary or is it going to be inflationary? What are these numbers going to show us that we're coming out on Thursday and Friday? So to just skip down the street like everything is fine, it's just not going to work anymore. And the market's kind of telling us that. And so I suspect that even in the bond market, we may reach that top for the bounce and we swing lower again and start to spike lower. So I'm not going to label the chart just yet. But I've just shown you 3, 4, 5. 1, 2, coming off in a third. So we're counting again the minute degree to form the first wave of minor degree down. And if it turns into a 5 down, then this is done. This will be done. Now, mind you, if they come by miracle of miracles, sometime between now and maybe next Monday, they actually do come to an agreement and everybody goes, yep, got it, let's go, let's run with it. It's still just going to produce what I am considering a drain, a liquidity drain from the equity markets, because there will be such a move coming where the Treasury Department has to auction off 30-year, 10-year, 5-year, 2-year notes, 30-year bond, 10, 5, 2-year notes, Treasury bills to start paying the bills. If we get to raise that debt ceiling, it will immediately be put into use because we have to. We have to meet our obligations. And then still we got to have this talk about the budget. And then we still need to deal with, what's going on in commercial real estate? So before we just kind of skip down the street and think that, hey, everything's fine, the Fed not going to let anything bad happen. They may have gone to the well and the well is dry. And the good faith and credit of the United States is now teetering. And I suggest that we all take a hard and look at how we stand globally and how much of other economies and the workings thereof are dependent on what happens right here in this country. Then tell me how the Fed's going to rescue us all. So I do believe we may still have another run up. I can't say no. That's why I'm leaving the labeling as it is right now. But if we start to break down and it comes in that I'm going to put a B wave up here, then please understand that what I believe will be enforced by then will be a primary C wave down. Now, it is not going to be the end of the world. I think that if we can just grab onto, well, what do? You position yourself for it, number one, or you can swing trade it, number two, or even better, you can day trade it. There will be plenty of trading opportunities. But mind you, again, it's going to take time to get down there because my support level for a primary C wave is somewhere in the neighborhood of 2980 to 3000 on the S&P future. And there's going to be a little bit different for the SPX. Not the end of the world. But people say, oh my God, you're talking about we're going to drop, 1,500 points? Yeah. We rallied. Everybody thinks it's okay if we rally that amount, but if we drop that amount, oh my God. It's like there's so much that has to come undone here, folks. There's so much that needs to take place so that we can recover, right? So at the end of the primary C wave, I'm going to label it as a completion point, not only for primary wave C, but for cycle wave A. I keep talking about it. Let me go back out here because I think I just got to make this really clear of really what we're looking at here. If I can't really see it on that with all that jumbo in there. But I'm looking at, well, that's 2009, folks. We've made a lot of progress. And we've made all that progress on zero interest rates. Zero interest rate policy took us all the way up to there. It's time to pay the piper. You can't keep building on that. Someone's going to go bankrupt, and it's going to look like it's going to be our government. But we come down, look at this. We're at 42. Look at it's not that far. 2980. So basically, where are we going back to? 2020 levels. Holy cow. Post-COVID or the pandemics, the start of the pandemic. But, that's all we're going back to. And then we get to rally a lot, at least back to here, if not higher. 2980 to 3000, not the end of the world. A lot of trading in between, a lot of money to be made. And then turn it around and get ready to get long because it's going to go do it again. So instead of just worrying about, oh, you're wrong, oh, you're always bullish, oh, you're always that, it's like, please just focus on the trading. It's not going to be the end of the world. Just be ready. Now, again, before I switch that around, I apologize. Before I switch that around, come back over to this hourly chart. We're going to see how this is going to open in 2 minutes. And right now, it's opening unchanged. Market could care less what they're saying. It's going to open unchanged. And now it's going to open down $1. So it's not going to fall off the face of the earth. But we want to see how this all is going to come in. And here they got this going to be up. Full tick. So again, we'll have to wait. And we're going to see how this all pans out. Leaving that open for right now. Moving averages, 50 to 20, all all flipped lower. On the hourly chart, all flipped lower. Even the 200 went stopped dead in its tracks. So we got some stuff going on. Now, over in the NASDAQ. Now, again, this one, if anything, actually can be 3, ABC 4. And they flip this around and they run it still to 14,000. And I know all you guys will be that are like all over my face about, what I'm doing wrong and what you're always right, et cetera, are going to be standing on top of that soapbox. I get it. But that's fine. You can do what you choose. But here, this did in Globex yesterday, early evening, made a high, hit resistance, 78.6, right? Remember I talked about it yesterday, so it's not something I use, but the market does? Sure as crap, it hit it right on the nose and then backed off. This is kind of very interesting. I make that statement, boom, they hit it on the nose, but they didn't get above that. Now, I've taken everything off so that we can take a look at exactly how this is trading coming off. So there is a possibility. There is a possibility. A, ABC, B, irregular, slight irregular, not too big. And then we get a C wave down, and then we put the 4 over here. But that would suggest we don't break down anymore. Maybe we can get down to 13,670 or so. And then we start to rally. They're not slamming this. There's this, they're covering whatever, but they're not really kind of going too gung-ho here. But I'm leaving it open. If not, then it's 1, 2, 3, 4, 5. Minor 5. Intermediate wave C, primary wave B. That's a real possibility for the NASDAQ. It is a real possibility. And then this is the beginnings of the downside. But we have a lot more to go before it even violates wave 4 overlapping wave 1. We got a lot further to go, but it can happen very quickly. It didn't take much time for it to get zipping right up through 37, 38, 39, 13,700, 800, 900. Didn't take very much time at all. I mean, this, May 11th, 35,500. May 22nd, 13,980. Wow, 11 days. A couple of weekends in there as well. So it could be over. Moving average is following. Now, let's rebuild. If I can go all the way over to here if they don't take it down. And we're still, now we got a little bit different, but we still got that 14,000 still in there. Still in there. So, again, is it done? Does it still have room? It could. It definitely could. Now, if it's done, then I'm going to go out to this 4-hour chart, and I'm going to we're going to be looking at something totally different. And that would be that this is the top of, I got to go out one more. But let me just show you. If this high completed it, come up, then we're going to be in there, A, B, C, and now we're doing, these are for the C wave. Wave C would be equal to wave A at 76.96, 8,000. This is a far piece to drop because we pushed and we pushed and we pushed, but everything seems to count out and be okay. So we got a lot on the downside, but that would be that exactly over time. This is a weekly chart. If that's the top and we're looking for what this could start to look like now, first thing I start to do is I put the same, but I'm just going to put retracements. All I want to see is how's it going to come off of this last big rally. So now we've gone through the absolute bear, right? 0.236, right? Then we have 0.382, that's 13,600. We have 50%, 13,000, basically 500. We have 618, 13,375, et cetera, all the way down. Those will be support levels. We'll see how the market acts coming off if it gets there. So, two sides of the coin. Yep, we can put the 4 down there, but it really should not go too much further than 13,364. That 200 should contain it. And then we start to rally. If they start to rally from here, like, hey, we're A-OK, bing, 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 then we can put the 4 down there and we're looking at that 5. And then that's the case. Let me get rid of this guy. Remove it. And we're going to put the 4 down to here. And we're going to be looking for that I just put up, which is going to be minor. Did that wrong. It's going to be minor 1 compared to minor 5, or minor 5 compared to minor 1. And so we go from there to there. And then we're just going to call it the current low, right? 618, 13,976, it just equals that high. Where minor wave 5 would be equal to minute wave 5 would be equal to minute wave 1, that's 14,142. So we're even adding a little bit onto this sucker now. But getting above this, we already did. Getting above that then would be the next big step. And then we have the resistance of 14,010, 14,050. Those could come into play as well. Now, that's if everything gets back on track and we start to rally, and then we have to rally pretty strongly. Can we? Sure. Sure. One little sell-off does not make the market all that bad. We'll see what happens, given both sides of this coin. That's right. I am actually going to end it there for today because everything is still up in the air. We don't have a lot of strength to say this is what the deal is. We don't know what the deal is. Tomorrow, we only have Fed Governor Christopher Waller speaking, and that's at 12:40 p.m. So in the afternoon. And then at 2 p.m., we have the minutes of the Fed's May meeting. That one should be a market mover. That one could really give us a toss. Thursday, we have GDP, initial jobless claims, and pending home sales, all there. Friday's the bigger day. Durable goods, personal income, PCE index, the core, a year over year, the advanced trade balance, the advanced retail inventories, et cetera, all that comes out, and then consumer sentiment as well. So balance of the week can be pretty big, plus the ongoing discussions. So that's where I'm going to end it. Our next update will be on Wednesday, the 24th.